Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. On today's show, we've got the CFO of Workhorse, Steve Schrader, joining us in about 35 minutes or so. He'll stop by at 8:35 to hang out with us for a few, but before that, we've got to talk about Tesla. How could we not? What a move yesterday. We'll talk about just the rally in big tech as a whole. We do have some headlines propping us up here this morning. Thank you very much, European Union, for that relief package. We've got some retail trading up thanks to Hibbett Sports. Pretty much green across the board. I'll throw it to Joel now. Joel, you would say the same thing, right? We're pretty much green across the board, right? I mean, we've got IBM earnings, we've got Coke earnings, but green on the screen.
Yeah, I'm looking at my front page here, and I don't have one issue in the red. Actually, Procter & Gamble is the worst performer. That's up 36 cents. S&P is trading up 24.75 handles at 32.70. We were already moving north, and then you got that $2 trillion stimulus package out of Europe. That accelerated the move. No daily highs in here for you folks. The next daily high, and we got to go back to February 24th. This is the rolling front month contract. Let me share my screen with you so I can perfectly illustrate what I'm talking about on the daily charts. Not a daily high until, as I said, that would be February 24th. We hit 32.90 and a quarter. We're back up in this area. Contributing to the rally is crude. We had talked about crude being in that trading range consolidation, now breaking out to the upside, up $1.14 at 42.06. That's going to help all the stocks in the energy sector. Gold distancing itself from 1,800, finally broke out, up $12.30 at 1829.80. And silver, who cares about 20? We're at 21. We're over $21 in silver, up 81 cents, 4% silver, playing some catch up. And Bitcoin doesn't want to be left out of the rally. That's up 2.39%, 9,410. Once again, finding support at the $9,000 level.
When's Bitcoin going to do something? This is set between, they talked about how volatile this is way less volatile than the overall market. We've been between 9,000 and 10,000 here.
There it is.
2 months. I guess support, right? 9,000. So maybe you just like play the range, 9,000 to 10,000. That chart's pretty well defined.
Yep, it is, and it's been doing that for quite some time. I don't know what what's the catalyst going to be?
I thought COVID was going to be the catalyst, but that didn't materialize. Obviously, in March, it tanked with the overall market. So, you look at that chart, and then you bring up the SPY chart against it, and it kind of looks the same in the last 3 months. You had the tank in March, and they came all the way back, and now it's just, hovering right below all-time lows. Those charts look the same. So for those people who say Bitcoin doesn't have any correlation to the market whatsoever, kind of doesn't last 3 months. Kind of does.
Yeah. Real quickly before we move on to a lot of earnings and the $2 trillion stimulus package, we got a question on our YouTube page, a reply, and they asked what a handle is, right? And we use a lot of terms on the show. If we ever have a term that you're not familiar with or whatever, just pop it in one of the several chats and we'll answer for you. But when I talk about a handle, for me, S&Ps are at 32.70. So if it goes to 32.71, that would be one handle. And then if I say, we've been in a 10 handle range, that would be 32.70 to 32.80. It's really nothing based on the charts. It's just kind of like Dennis.
It's the number before the decimal.
Yeah, good point.
So
Yeah.
we're just the number before the decimal. So that's what we're talking about when we're talking handle. So Bank America trading in the 23 handle, the number before the decimal, 2387. So when Joel's talking handle, it means the next number, going up to the next handle would be the 24 handle for Bank America. So, it's from the floor, I think, originally, really. We're talking handles all the time. But I mean, that's the markets. It's the number before the decimal. Simple way to put it.
And also, like any other terms, like we say numbers at the point, or the whole number. Obviously that would be 24 in Bank America. But anyways, just be cognizant of that. If you have any questions along those lines, just pop them into the chat. But boy, what do we do first? The $2 trillion package out of Europe, or
It's
do we
all
do
just good news all the time. Because good news is good news and bad news is good news, and it's just all good news all the time. So party, yeah, we got a stimulus package coming. Let's start there. Let's start over in Europe because Europe's been open for a few hours. Mr. Israel, what's up?
Yep. We got an $858 billion relief fund from the EU that gives the body just about $2 trillion in spending power. They're coming to the rescue. I mean, that's it. They've been at the table for what, 5-6 days now, trying to hammer this thing out, and they got it. So I guess now it's our turn. Maybe, I don't know.
It's a nice pop over in Europe. You're seeing, if you just want to bring up some ETFs that track closely,
Sure.
EFA, IEFA, but actually an IEFA, don't look at that 6260 print because that's out to lunch. Look at EFA right now, up 0.8%. So you're getting a pop. You're getting a pop over in Europe, and that is following over here. But we also have vaccine headlines driving us over here as well. So Europe helps, but we've got another two positive data points from two separate companies on vaccine news. And we know every time we get a vaccine headline, it seems like we rally 250 points. I had a fun tweet this morning there, just tweeting it out. A little bit of a joke, but a little bit of reality here too for the bears. I mean, we seem to pop every time we get a major vaccine, coming out, a company. We seem to pop about 250 Dow points on the positive data. And we have been getting positive data points, a lot of them lately, like two of them from smaller companies here today, which will get them IMRN and IFRX. But we've been getting Novavax and AstraZeneca and Pfizer and Moderna. And it seems like every week we get at least 2 or 3 of these positive data points. So the fun tweet was 250 points. We get 3 positive data points a week. That's 750 Dow points a week. We got 24 points left in this year. That equals 18,000 Dow points by the end of the year if we just keep riding the vaccine train. And that would put us at just around roughly Dow 45,000 by the end of the year. Now, obviously, there's a lot of other factors, a lot of other things involved in that. But if you're sitting here and you're like, well, COVID's going to come to roost eventually, and I was in that camp for a long time, it's not happening. And you've got to admit when you're wrong, and you've got to move on. It's why I've been adding stocks to my portfolio on the pullbacks. It's why I've been biased long here in my trading account for a long time. It's why I haven't been taking any shorts. And there is certain sectors that are obviously outperforming and certain sectors that are underperforming. We know the reopening stocks like the Boeings and the airlines have been underperforming. But just when you look at just the overall market and look at the S&P, and every time we get the positive data point on the vaccine, we seem to rally significantly. It's hard to be a bear.
And so if you look at the virus too, number of confirmed cases has been going up basically for 5 weeks now. But we talked about this too. The number of deaths, yes, it's gone up, but it really hasn't gone up with the same sort of speed as the confirmed cases. So it would support the narrative that it is at least partly the result of more testing. The daily death rate, we've really been constant more or less for since May, since the end of May, early June.
We talked about this last week. It's I think a couple of factors involved. One, we're getting to know the virus better. We're getting to know the therapies that help along. We're getting maybe to identify, and obviously that's a good thing. Less people are dying than before, at least on a percentage basis. So that's good news. I also think you have a lot of younger people being infected now. And, and obviously younger people are going to fare more well with this virus. So, looking at it, and we were popping around a 6 or 7% death rate before. We've said on the show for a long time, it was going to be significantly less than that. We were guessing somewhere between 1 and 2 because we knew we were missing just a ton of cases. But maybe we're going to be under 1%, on the death rate on this thing. And then it starts to look not nearly as scary. So in any regard here, we're traders and we're talking trading, and the market is not scared of COVID really whatsoever. It is scared on certain stocks, and Kevin O'Leary making some fantastic points. Love him or hate him, he makes good points sometimes. And obviously, I like Kevin O'Leary. And he was making some good points on CNBC this morning. He was just talking about how, other businesses have picked up the slack. Obviously, these businesses have really suffered, and consumers have changed in the way they do things. We talked about the Zoom meeting and the merger that, happened, 2 weeks ago, which was all done over the internet and nobody met in person. So it means business travel is probably going to be permanently impaired. It means there's going to be less people flying from a business perspective. I also think there's people who are finding different fun ways. We know Winnebago has had a fantastic run here because people are buying, campers and doing more camping. They're doing different things. They're getting outdoors more. So, they might do that and they might say, hey, I kind of like this. This is kind of an alternative to just going to a hotel. So if you really look at, what is being impacted permanently, obviously airlines are a no-brainer. You can think, that's, something that is going to be down for a long, long time. You can see the stocks. They just don't rally. I mean, this has been an impressive, last month for the S&P. We went from 300 to 324. So you're talking, roughly an 8 to 9% move in that S&P. In that same time period, in the last month, Boeing is down. American Airlines is down. UAL is down. Carnival Cruise Lines is down. Norwegian is down. So you can see, what has been carrying us has been the tech trade, and it carried us yesterday. So you're seeing rotation into those businesses, those companies that aren't impaired by consumers not congregating as much. So it's something to think about. I mean, are we going to go back to the way we were before January? In a lot of businesses, yes, but in some businesses, no. And I think if you're looking at stuff to buy, you've got to be buying those businesses that are not going to have permanent decline in their businesses because of consumer habits changing.
Would you say Tesla is one of those businesses? I don't know.
Yeah. I mean, people are, and Tesla, obviously, that's a whole different story. Tesla is its own stock. It does its own thing. And we're going to move to Tesla. We can move there right now if you want, because
Sure.
Spencer, you made a fantastic call on Tesla yesterday. We were talking about setups and you're like, don't laugh at me, but I kind of like the setup in Tesla. And then we set up the trade for you on the show. So great eye, Mr. Israel. We set up the trade, and I'm kicking myself because I did not do this trade. I almost did, but that's a story in itself. But I set it up that I was saying, hey, maybe it gets down near yesterday's low, which was 1490. Maybe you take a flyer and you stop yourself out at the low of the move, which is 1431. So risking 60 or 70 points depending on where you bought it. Looking for the pre-earnings run. We had the catalyst. All the ducks were in a row on Tesla. We had the catalyst of the earnings coming up on Wednesday. We had the nice setup with the consolidation station, and that's when you strike. And we talked about this on the show, and hopefully some people in the chat and hopefully some people listeners took the trade, because Mr. Israel, you were spot on. Tesla ended up running 150 points yesterday. It's tacking on another 40 points here this morning. So, and it's looking like, hey, you got another full 2 days before it reports Wednesday night. This thing could make all-time highs before Wednesday night. So impressive move for Tesla. It was a nice setup. I wish I would have took the trade. Like I said, I almost took the trade, but I got sidetracked. And then I just didn't want to babysit Tesla because, like I said, Tesla takes a lot of mental capacity to stay in a Tesla trade because it's such a volatile stock. But the setup was there and it went. So congratulations to those who took the trade, and a nice call by Mr. Israel.
Pretty simple, Dennis. I know you ended up canceling the trade, but we try and keep the technicals. I mean, you don't see a lot of fancy lines on here. You don't see moving averages. What we like to concentrate on daily highs and lows. Two closes in the same area from Tesla on Thursday and Friday, just above 1500. You had a down day on Thursday, decent volume, but on Friday the volume fell under 10 million shares, 1490 low, 1584 at close. I mean, when you're looking at it, and Dennis, I think you said you were out there at 1491.
I had my order. So if you want to know the backs, I had my order at 1491 because I said if it gets, I said on the show, maybe I'm going to try this trade for a swing trade. I had my order sitting out there to buy at a 14.91, which was $1 above the previous day's low. And it got to about 8:45, 8:50, and I wasn't filled on it yet. And then I had some stuff to do. I was like, I don't want to babysit this because I know Tesla. I was out of all my other trades. I had no other trades on at the time. And I was like, I don't want to babysit. I was like, I could buy it and put a stop on it. But Tesla, you know, as a one, I'd be checking my phone all day on it. And I had a lot of things to do. We're doing a lot of different things right now on a personal level. So I had a busy day for a few hours, and I just didn't want to deal with Tesla. And I canceled the order for that reason. Bad reason. I should have just let the trade manage itself, left the order there, put the stop in, and left. So learning experience for me, I didn't do that. And obviously I probably would have been filled because it traded down to 14.89 and then ran and ran and ran. So I looked at it all day running anyways, and I was like, wow, I screwed up.
It's not like I took my own advice either. So
no, I know we don't take.
Dennis, don't look at the screen.
We don't
man.
have 90% of the time. We can't do every trade we talk about. So, but I had the order out there, Mr. Israel. It was sitting out there to buy, and I canceled it like 5 minutes before it got filled. Maybe I would have never got filled, but I probably would have.
Yeah, I don't think you
trade 2
would.
points below my price, so
Yeah.
I probably would have been filled.
Set it and forget it.
If you want to do it, I mean, you know, this is swing trading, and you put your stop in, and then, you know, you go on and you move on with the day. I talked myself out of it somehow. I canceled it. I hadn't got filled in the first 20 minutes. I was like, wow, if it starts tanking now, I don't know if I want it. And it just went down enough just that it would have got me. And then it stopped down there all morning. It didn't turn till about noon. And then it started ripping. If you look at that, you know, daily chart, or if you look at the intraday chart, it sat down between like 1490 and 1500 for like 2 hours. And then it started ripping. So I don't know if there was a headline. I know somebody was saying something with the electric deliveries expecting to be higher, maybe set a record. Somebody, you know, maybe had some positive commentary because it really blasted off then. But, you know, really it was the techs. Everything tech went yesterday. And let's maybe move on to some other tech stocks, because it wasn't just Tesla running. Everything tech was running yesterday in the afternoon.
All right, tech earnings. Let's go to Beamer.
And you know what? You go to IBM. I don't even consider IBM a tech stock. Yes, it is, but it's not like the Momo techs. IBM is this value, you know, yeah, it's having a pop here, but, you know, is this the stock that's going to blast off to 200 when, you know, the NASDAQ continues to run? Probably not. You know, it's a very small portion of the indexes now because it's really done nothing. I mean, IBM, think about IBM, and we can do the IBM earnings now, but think about what this has done. Bring up the monthly chart and think about what IBM has done in the last 6 to 7 years. From $200 in 2014 to $133 now, even with the earnings pop. And you think about the other, you know, tech in the same time period. The NASDAQ back in 2014, the QQQ was $84, is now $266. So your average tech stock has tripled over the same time period that IBM has lost 33% of its value. It's a stock that I don't want to own long-term because it's just been a perennial underperformer. Are they even eventually going to figure it out? I thought they were going to figure it out back in 2017. I tried on a flyer and I was wrong. And I was like, you know what? You buy stocks that are on uptrends and you sell stocks that are in downtrends, and you sell them on the pops. I don't even care what the earnings look like. I just know IBM. I don't want to be long IBM.
Well, I'll
tell you the numbers.
I'll tell you that they beat and they beat. How about that?
It's good. Good news. But are they
do it all
growing?
Do they do it all the time though? Don't they, Spencer? I mean, I don't have the.
They're hated.
I don't have the
Well,
probe.
Don't
they beat every single quarter?
They beat
what IBM product do you use, Joel? Spencer, what IBM product do you use?
The Weather Channel.
Is there any, like, it's in the chat? What IBM products do you use? I'm sure indirectly we use some.
Right?
They own the Weather Channel.
Yeah.
I pull it up. Yeah, I'm using IBM right now. Watson. I use Watson a lot.
No, I don't know. To answer your question, I don't know.
Maybe indirectly we use some, but you think about, okay, NVIDIA chips. Okay, we use chips for everything. Chips are just everywhere. I mean, you think about Apple. I'm looking at multiple Apple products sitting on my desk here right now. You think about Amazon. I have Amazon packages showing up at my door every single day. You think about Microsoft. Microsoft is in everything, you know, obviously as well involved, you know, and then obviously the gaming market is huge for Microsoft too. So, and then you think about IBM. It's like, why do I use IBM for? sometimes just thinking about that, and yes, they have Red Hat and they were trying, but that goes to show you they had to pay way up to get growth because they can't internally get the growth themselves. Are they going to figure it out eventually? I hope so. I like the story of IBM, but I tell you, they've been a perennial underperformer. There's a reason it yields 4.9% because it's been a dog. And this stock price has been underperforming forever. And every time IBM has popped up, it has been another selling opportunity. So I'm not buying IBM up $6 here today because I've been burned doing this before, and I'm not going to get burned with it again. Guilty until proven innocent in the case of IBM for me.
Nice pop. We've seen this before. You did sneak into the 135 handle. 135.23 stands as your pre-market high. I call it your after hours high. And what I like to see when I'm looking at these after hour levels are, do they coincide with anything? And you know what? It does. You had a high of 135.88. This was on June 8th. So to me, it makes that whole region, if it can get up to 135. I look at this 135, 136 area, and if IBM really wants to show that this is going to be up 20 stakes today, you're going to be 137 bit. I'm not saying it is.
I know you're not.
I'm just saying, stop. I mean, someday it may rally, but that's what I'm looking at. That 135, 136 zone. You also had problems there in March, so that's the area of control here. If you want to be like a Super Bowl, nice move going into the report here. So I don't know if you're 125, 126, 127, 130 option buyers.
Better hold the gains.
Yeah,
I'll say that for. Yeah. I'll say that for the people who are in the bull tree on IBM. It better hold the gains today, and maybe it will. Last earnings report, I felt like, or two earnings report, I felt like it held the gains for a couple of days and then eventually imploded anyways. But bring up the 7-year chart on IBM. I just want to make a point. And this is, really, what swing trading is all about. Bring up the 7-year chart. Go out further than that. That's a 2-year chart. So bring up the 7-year chart.
There it is.
See what I'm talking about? Take your Jeff Mackey purple crayon and draw a line. One day we'll be able to draw lines. And I know, Mitch, we're talking with you and we're talking with some different people. We need to, start figuring out, how to do more on the charts because we want to be able to draw lines. We want to be able to do things. But if you took your Jeff Mackey purple crayon and you drew that line on all those tops there right now, you have a clear downtrend in the last 7 years. Selling stocks when they're rallying that are in downtrends usually makes money, and buying stocks that are in clear uptrends when they're dipping usually makes money. So I've said this, I'm like a broken record around here, but I want to keep pounding it in because we have new traders and we have traders who are seasoned that still try to buy the dip on everything. And buying the dip on stocks that are, in uptrends usually works. Buying the dip on stocks that are in downtrends sometimes doesn't work, and sometimes, and a lot of times doesn't work at all. So sell the rip on stocks and downtrends, buy the dip on stocks and uptrends. This is a stock that's in a clear downtrend. I'd be selling the rip just by those rules. You guys are silent. Why so quiet today?
What about?
I'm doing all the talking.
What about?
What else is new?
Well, I'm bringing us back to the original tech conversation, which was just the strength of tech yesterday.
Excellent. That's where we wanted to
Facebook,
go.
Amazon again. Oh my goodness. Really the FANG names. Nothing new here.
Yeah.
It's just every day is Groundhog Day, but as Dennis said, good news begets more good news begets more good news, and it's just, I feel like a broken record, but I mean, tech again.
The top 6 names in the NASDAQ 100 make up 49% of the index. So the other 94 make up the other 54, and those are obviously Apple, Microsoft, Amazon, Facebook. I believe Tesla's number 6 now, which is impressive, and then Google. So you look at all those charts and they all move together. They're all index plays. I mean, Apple looks like it's held up here long enough that it looks like it's going to break out eventually over 400. So, and maybe today we failed at 399.82. We had an ugly day for tech for 2 days. The tech wreck lasted 24 hours and then we bounced back, and then we've been in consolidation station for a couple of days before everybody decided we got to jump back into the tech trade. Amazon was down for a couple of days. Farther than that, it really had an ugly week. But it gets, 2/3 of the losses back yesterday, and now it's tacking on another 60 points this morning. So there you are. Amazon pulls back 10% and gets back 7 or 8% of it in 24 hours. Tesla, we know the Tesla story. I think it's probably making new all-time highs before the earnings report. I don't see why not. I mean, 1682. The bloody stock is downgraded today, and it's still up 40 points. So it just goes to show just how much love is in there, and people are excited. Would I hold it through the earnings report? Not if I was a short-term trader. But if you're a long-term investor like Jason Raznick, you've been in it from $40, why not? So always know your time frame, because I get that all the time. Would you hold it through the report? Well, it depends. What am I in this for the next? Was I in it for a 3-day trade? Was I in it for a 3-month trade? Or was I in it for a 3-year trade? You're in it for the 3-year trade, you're probably holding it through the report. You're in it for a 3-day trade, you're absolutely not holding it through the report. So, there's always that consideration. We set up the trade for yesterday on Tesla. It was to buy around 1,500 and sell it Wednesday at 359 right before it reports. So, I say that trade is still on if you've got it. And you're up 100, or you're up, maybe you want to ring some register on some because you got 183 points in 24 hours, which is a pretty awesome move, 12% move, but off the Spencer Israel call. But
yeah,
I think it could keep going.
One thing too is that, and I think it was Jason said he was thinking of selling his options or whatever. It's a very, very simple math here, but let's say you have a 1650 call right now, and it's trading for $60.
So
you are you're selling the thing at 1710. You take advantage, look at where, the expected move is, look at where your options are, look at the pricing, because, even if it's up, but not up a lot tomorrow or after the earnings, then they're going to zap that premium. It all depends how far you're going out. But if you're in the weekly or next week,
maybe you want to go to like the 1800 and you don't mind selling it at 18. Like, what's the 1800 call for going for? I bet you it's crazy. I bet you it's a lot more than you think. I bet you it could be like 40 or 50 bucks. That's
for when?
For the weekly.
Oh.
Joel, the premiums on these are nuts. I'll go look right now. Options, bringing it up the options chain. So the 1700, where are we looking? We're July 24th, right? Is that the weekly?
Yeah.
Yeah. So July 24th.
I'll have to go. I'm short at 45.
1800 calls are going for $70.
Oh.
$70. So you're selling at $18.70 if you decide you want to just lock in a little bit and rate one of them. You have 100 shares. You want to write one call against it, $68.45. That was the closing price, Joel. That was when the stock was at 1643. The stock's up another 40. So you get $90, maybe $100 for the 1800 calls, and you're selling at 1900. There's some nice premium. I won't argue with you if you want to play it that way, the way Joel was setting it up. It's huge premium. I will argue with you if you're buying options. It's such a tough game when you're paying the 1800 calls. You're gonna pay $100 for it. That means it's got to go to 1900 for you to break even. It's a tough gig. So there's nice premium there for option writers right now.
Yeah, and also, another strategy, taking one out of the book of Nick. Let's say, you don't necessarily want to sell that call, but you want to lock in some profit. Then go to a higher strike. Let's say you're long to 1700 and you got a real nice lead on it. Sell the 1750, lock in that premium, because, like I said, unless it's up, like, I don't even know. I don't even know if it's 30, 40 bucks and something like that. I don't know what the expected move is, but
we tell you the expected move. We can tell you the exact expected move. It's easy. How you do the expected move is you add up the calls and you add up the puts. It's $250. It's the expected move. You can look at the 1640. So you take the 12, right in the middle. So you go 125, 125. So yeah, it's 250 points is the expected move. It's a huge expected move.
Dennis, that's a straddle for you to sell.
So I don't like selling straddles because I've been burned before. Remember, I told this story a long time ago. I was like, I like this selling straddles. And I did one like success couple. And then I did the Apple going into earnings. And Apple was trading around $500 at the time. And this is going back pre the 7-for-1 split,
long
right?
Time ago,
literally the day before it, because this is what I got burned on. So they halt the stock, 430. And I've got the straddle written for $25. And I was like, because I'm thinking, and that's a 5% move on Apple. I don't think it's going to move 5%. And they come out and they blow the number away, and it's halted right now. And then they come out with more good news. And then they announce a 7-for-1 stock split. And I go, I am dead when they announced the 7-for-1 stock split. And I'm like, crawling under my desk looking for cover because I have the straddle written for 25 points. And I'm thinking, Apple closed at 525 and, 550 is my break even. I'm like, man, I hope this doesn't go over 600. And it ended up going like 630 or 640 on the open. I'm like, Deep breaths. And, and obviously I learned the hard way is that when you do write straddles and they come out with some really excellent news, you can actually get burned pretty good. So anyways, for those 25 points that I took in, I ended up losing 75 points on the trade. So you can lose a lot of money writing straddles as well. So don't always think it's this free money. In the case of Tesla, do I think Tesla's going to move 700 points on the earnings? No, but that would be the equivalent to my bad rate. But 250 points seems like a lot. But sometimes funny things can happen. For the most part, straddle writers in the long run make money. I guess I should have stuck with the strategy, kept writing straddles, and maybe I would make it back. I know Nick, obviously, excellent option writer who we have on the show every other Tuesday, makes his money, not always writing straddles, but doing different things. But anyways, wrote that straddle, and it was ugly on Apple.
You
and I
could do
haven't written a lot
something-
of straddles since.
You could do something too on the outside too, right? I don't know if that turns
Yeah,
into
to protect yourself, you
a
can buy, but
butterfly
I didn't
or
do
something
that.
like that.
Why would I do that? I was
No.
like,
Why
that's
would-
giving up more premium. So Nick, when he's doing it, he'll buy, even when he's buying, selling a put, he'll buy a lower put to protect himself in the case in the event of COVID hits or something crazy goes on and the stock just tanks. It's a smart way to do it. Well, I'm the dumb way to do it. I was flat out, I don't need the other protection. I'm not going 25 points. No, it's not going 25 points. It's going 75 points. So you can get burned right in straddles, but, protect yourself. There's a lot of smart ways to do it. See Nick Shaheen if you want to know the smart way to do it. See me if you want to know the dumb way to do it.
S&P's pulling off a little bit here. Not much. I mean, 6 handles off the high. So 73.25 looks like a good number so far.
All right, we'll be live with the CFO of Workhorse, Steve Schrader, in about 4 minutes or so.
Can we talk the stock?
Sure.
Let's talk the stock, for 2 minutes before, because, with the CFO, he probably doesn't want to comment that much on the stock movement. It's more on the fundamentals of the company. But let's talk the stock, because we looked at this yesterday. I was on the fence. Like, I kind of like it. I may have got stopped out if I would have put the trade on. I did not put the trade on. It was trading around the $15 area. It was down a little bit. It was in the 40. When we talked about it was like $14.90, $15. It tanked on the open. A lot of the techs got hit in the first 20 minutes yesterday, and that was the washout. And then it bounced right back, consolidated for a couple hours, and when Tesla started to go, Workhorse started to go too, and Workhorse exploded from $14.50 up to over $17. It's now tacking on another 92 cents here this morning, $17.24. Looks like a complete key reversal yesterday there, Joel, because it made a new low on the move and then it made a new high on the compared to the previous day. It looks good on the chart here right now, actually. So I think I'd be a buyer of the pullback on Workhorse. We're going to get some fundamental information from Workhorse, though, in 2 minutes when we interview the CFO, and maybe he'll change my mind or maybe he'll talk me into it. But right now, I still kind of like it. I like it more than yesterday now.
Yeah, after it moves a couple bucks, but
yeah,
we were looking at the lows, just above 14, and then there was also that one low at 13.65. What do you get to? You got to 13.36.
Yeah, so I was saying we'd maybe stop yourself out at the low of the move, and so you could have got stopped out yesterday because it did take the move a little low out by 30 cents, which is 2% on a stock. So it went down, but then it turned around, and sometimes those are the best trades. You get down, you take out the low of the move, shake out people like me, maybe who have off for a swing trade, and then you go. I mean, and we know Jeremy Newsom loves to, see that, little undercut, and then the rally after that, and saying, okay, well now we've shaken out some weak hands, maybe DDD, and now we can run.
All right, want to do Hibbett Sports here before we
quickly.
Let's do HIBB. They pre-announced sort of yesterday. They gave some guidance for their second quarter and the first half of the year comparable sales, and both numbers were good. They expected Q2 comps to increase in excess of 70%. First half comps increased about 20%. It's dragging up Nike, dragging up Dick's with it this morning, but HIBB is one of your big gainers of the day.
The outdoors play. This is the outdoors play. We've been talking about the outdoors trade. Kramer's been talking about the outdoors trade. This is one of the classics on the outdoors trade. And you are seeing, sympathy moves across the board. I know we only have 30 seconds, but you're right. Dick's Sporting Goods is trading up 4% on it. Nike is trading up on it. Foot Locker is up 7%. We're seeing that pop as well. Deckers, I'm assuming, is probably going to trade higher on this. You can go into the little ones like BGFV. That's trading up 7% on as well, which is Big Five Sporting Goods. So the outdoor play is back on.
Just nice confluence here with that pre-market high. Your pre-market high comes in at 29.61. And on your dailies, let me switch over to a daily chart here. getting back up here, folks. Look at that. I just snuck this in here. That was 29.08. If I could go back a little bit farther, I see a 30 high. So the fact that you've already backed off that pre-market high, I think if you want to take some profits in this one, you may have to step out. I don't think we're going to get back to that pre-market high, but that 29.50 to 30. I mean, there's got to be a ton of stock at 30 for as long as since that stock has been up that area. But I agree with you, man. Good. The outdoor play, the sports, people are doing things and outdoors and going to Hibbett Sports to buy it.
All right, our listeners asked and we delivered. We are joined now by the CFO of Workhorse, Steve Schrader. Thanks for joining us this morning.
Thanks for having me on, guys.
Well, what I was going to say before Joel interrupted me, Dennis interrupted me a few minutes ago, but I was going to say, everyone hit the like button if you want Steve to spend this time trying to convince Joel to move to the great state of Ohio. But that's not going to happen probably. Steve, for our listeners who aren't aware, explain the opportunity in last mile delivery, because that's essentially the sandbox that you play in.
Yeah. So last mile delivery, think of kind of UPS, DHL, FedEx, kind of the big trucks, the 1,000 cubic feet trucks. But also think of kind of also like what Amazon uses, like the Mercedes Sprinter, the Ram ProMaster, the Ford Transit that you see in the neighborhoods too. So that combined market replaces vehicles to the tune of like 300,000 a year, and it's an $18 billion market. So although sometimes that market isn't sexy enough for the big players, it's certainly sexy enough for us and a big market for us to get a share of our market share.
So Steve, we solicited questions from our listeners and from our chats, and pretty much the only thing on everyone's mind is the outcome of this U.S. Postal Service contract that we're waiting for. Do you have any insight as to when you may hear about that?
So I can't say too much about that, unfortunately, for your listeners. What I can say, though, is what's public. So the post office in the March time period of spring of 2019 had 6 companies go through prototype and durability testing. We were one of those companies. We were the only all-electric option. And we were also one of the 3 American companies that went through the prototype testing. And they issued a RFP in December, late December, and the submissions were due July 14th, so last Tuesday. That's about all I can say. What I will say is our all-electric, though, is probably the perfect vehicle for them. So when you think about what the post office does, 70% of their trucks go about 17, 18 miles a day and make 700 stops, mailbox, mailbox, mailbox. So ours runs almost like a golf cart. So that's really more what you need. Right now, they get 5 to 6 miles per gallon. Ours get over 40 miles per gallon equivalent. And we have half the maintenance costs, which is really what's killing the post office right now, because we have no transmission and about a third of the components. So we'll see what the post office does.
This contract, I think, could represent as much as $6 billion in value. Fair to say that it's the biggest catalyst for the business right now?
Well, I mean, I think it's a great opportunity for us. So obviously, if we were to get the full award or a decent size award, that would be transforming for the company. But from the standpoint of our current business, we like that as well. So we currently have our C series, which is C1000, C650, and C450, and those are all cubic feet sizes. So those are what competes. So the C1000 would compete with the big trucks you see right now of UPS, FedEx, and the C40 and 450 and 650 would compete with the Mercedes Sprinter and the ones I talked about earlier. So we think those all compete. We think right now we're the only electric vehicle option in that delivery market. We are actually making trucks right now at our Union City, Indiana plant. And we plan to make 300 to 400 this year. Most of those will be at the very end of the year and the last quarter. And we also have a back order of 1,100 vehicles. So we already got sales out there and orders from UPS and DHL. In addition to that, we own 10% of Lordstown Motor Corporation, which I think you're probably at least familiar with their endurance unveiling that Vice President Pence was at as well. So, and we have a drone that is patented and comes right off the top of the truck. So I think we have a lot actually going for us, even if we didn't get the post office.
Steve, Dennis Dick here. Let's talk about the drone delivery. Where do you see this industry going? Because we hear about this, that drones are eventually going to be bringing us their stuff, but we don't see any of them really happening yet. Do you see the whole industry, the delivery industry, moving into drones as a more efficient way, or is this just going to be, something that may not come to fruition?
I would probably say that was, Dennis, the same opinion we probably had even last year. I think we thought the drone was a way to sell more trucks. And what happened was the virus.
Right.
So the interest in our drone that comes right off the truck and doing touchless delivery has just taken off exponentially. And so from our standpoint, we actually went down to Virginia and in front of administration and governmental officials in April. We, along with another company called Drone Up, ran about 50 missions. And what they wanted to see, how does that interact from a standpoint of and can be used for medical and emergency supplies. And for example, Drone Up had 3 people on the ground running theirs. Ours autonomously through software came right off the top of the truck, dropped the package and came back to the truck. So I think the interest even cranked up from there as well too. So now if you want to do something commercially from a standpoint long-term with drones, or be a drone OEM, which I think is a possibility now and actually a legitimate business case that could rival a truck, you would need to get certifications from the FAA. And you need to get a type certification and a production certification. And those certifications take about 12 to 18 months. So I think even the FAA understands that, they want safety first for sure. But from that standpoint, I think it's a real opportunity. I think it's more like 2 years away versus 5 years away.
The drone business is that in California or because I know you've got different you're based in Cincinnati, but you're I'm trying to phrase my question correctly here, but I guess is there any advantage to the drone delivery business being in California?
I'm not aware of any advantage right now that there's any unique laws in California or not, but we are based in Loveland, Ohio, and we've already run missions. We've done for about 4 or 5 years. We've run different missions here in Loveland and with different parties. So again, on a short-term basis, you're allowed to do that and get exceptions from the FAA. It's more if you want to really make this a commercial long-term business.
You mentioned Lordstown Motors. You've got a 10% stake. Any plans that you can say to do anything with that, maybe buy more, or just talk about like the stake in Lordstown Motors and kind of what they're doing?
Yeah, I mean, they're a private company, but they've been pretty public with what they're doing from a standpoint of their product. So they've made the endurance pickup truck. I think they're trying to appeal more to fleets rather than maybe the commercial market necessarily. I thought they said that by sometime next year, they're going to have them ready to go. Yeah, we have a 10% stake. It's non-dilutive. They also have the GM Lordstown plant, which is a 6 million square foot plant. So we talked about our own Union City facility from a standpoint of ours is 250,000 square feet, and it could handle if we got a post office award and what we're trying to do. But you also have as an owner in like Lordstown, an option possibly, and maybe to subcontract if it's if it increase your margins and maybe not spend capital at Lordstown or at Union City, to maybe use Lordstown as a subcontractor since it's such a big facility and already kind of ready to go.
Just as far as just the last mile delivery competitive landscape, 2 of your biggest customers, as you mentioned, UPS and DHL. Of course, you're trying to work with the U.S. Postal Service, but I guess like talk about that landscape and sort of just who you're going, who are your main competitors, who do you see as a big threat right now?
Right now, we don't have a competitor. I think it's just us that is out there of all the certifications from a standpoint of we can sell in all 50 states, and from a standpoint of we are actually producing and making them and we'll be delivering this year. I think at different competitors, for example, that could be competitors like Rivian has thrown out that they're going to make a delivery van. But I think first they're making trucks, and I think they're 2 or 3 years away from making a delivery van. So we kind of like our opportunity here that we got a 2 to 3 year head start on everybody. And we kind of understand and work with all these customers, understand the duty cycle. The potential customers, you talked about DHL and UPS, which you already have sales orders for, but There's also, there's FedEx. We're working with Ryder right now because Ryder already has a lot of these customers that maybe not as big as the UPS or the FedEx, and maybe don't need a C1000, but want smaller vans and trucks that we make. And they can accumulate 25 or 50 or 75 orders, and they can also do the maintenance for their customers. So we think that's a great relationship. And we're talking to everybody you would think of from a standpoint. I think their biggest question is it's not so much actually sales and getting orders. It is actually, I think they're just waiting to kind of say, how soon can we get them?
We're on the line with Steve Schrader, the Chief Financial Officer for Workhorse. Steve, let me zoom out here, and obviously the craze with electric vehicles. Give us your perspective on the car industry 5 years from now. You have Tesla, NIO, Ford, GM, Fiat, Chrysler, Ferrari, the European companies. Do you see some sort of overall consolidation as, more ride sharing and less cars are needed, or do you see any bankruptcies in the sector?
I don't know about bankruptcies. And what I will tell you is it seems like when you talk about the cars too, is because that's not our market. But it seems like there's always consolidation when there's an interest like this. So I can see that being a possibility. I think because there's so much competition there as well, everybody wants to either do the pickup truck or the automobile, right? And the EVs are hot. I think because those are the sexy areas, there's competition. I guess we like where we're at from a standpoint. There's not a lot of competition in the last mile delivery, but they also want EVs too. A lot of the fleets have a goal to kind of have 30 or 40% of their new orders be EVs going forward. And that actually, even though it's like I said, it's not the hot area and hot market, that is the fastest growing market. It grows about 15% a year and replaces 300,000 vehicles. So we're kind of just happy to be in that market.
Steve, Workhorse has been public now for a decade, actually. So how do you explain the enthusiasm in the stock that wasn't there 2 months ago?
I think it was when I was hired.
I like this guy.
Good answer.
I think honestly is what has happened is we certainly got caught up in the EV interest. And from my standpoint, I think from relative comparison, I think is where it really kind of came out. So here's, from a standpoint of, let's look at Nikola, so Nikola's taken off and it's a multi-billion-dollar company, and still is probably 2 years away from making anything, right? And I think what investors have done, and again, you guys are the experts more on valuation than I am, but I think what the investors have done is at least looked at little Workhorse here and said, look, not only are they making vehicles right now, they already have orders. In addition to that, they have a drone and they have an opportunity with the post office. And I think relative comparison and just to being $1.5 billion company, I think we look pretty well.
Steve, one more question. What happens if, say, hypothetically, you don't get the post office contract? You've talked about some of your other businesses. Where obviously is your focus going to go to then? I
think it's on the C series and the drone. I think, again, the post office to me, I always refer to as the cake on the icing because it's so big.
Yeah.
But from a standpoint of the actual business, what I'll call is non-post office business, we think is great. We think we like our place in it. We like how big that market is, and just getting a bit, even a portion of that market share of an $18 billion market is quite a bit of opportunity for us. In addition to the drone, like I said, could be its own business case by itself. So I think we like where we're at and we like our position. Even if we didn't get the post office, we'd certainly welcome the post office opportunity as well.
I just want to repeat what you said earlier. Still on track, you said, to deliver 300 to 400 vans this year. Have you announced your upcoming earnings date, or can we get some? Is that public information yet?
We haven't yet. We probably will do that in next week or so.
Okay. This is for the June quarter, right? Yeah. Okay.
The June quarter, really be in early August sometime.
Early August. Okay. And what was I had one more question for you, and now I just kind of lost my mind here. But I think maybe Dennis kind of asked my question, which is just what you would do hypothetically in light of using the USPS contract. But I guess to wrap it up here, Steve, where best case, worst case, where's the company in 2 years?
Oh, in 2 years, best case, I guess we get the post office contract. We also have a lot more orders, and we're producing to the tune of maybe 2,000 to 3,000 vehicles a year in the C series. And best case from a standpoint of the drone is actually maybe we've got certification, FAA certification, and it's a legitimate maybe drone OEM business. Worst case, I guess, is we don't do any of those things, right? I mean, the worst case, but I don't see that happening. I just see we got a great management team here, and I think we've just positioned ourselves really well, and we're looking forward to kind of going forward.
Steve Schrader is the Chief Financial Officer of Workhorse. Steve, we thank you for the time today, and stay safe out there. Crazy time.
Thanks, guys. Thanks for having me.
Thanks, Steve.
All right. Hope you guys enjoyed that. If you like that interview, like our video, like our channel. If no one likes it, I'm going to assume if no one likes our channel and no one likes the video and no one hit that like button, I'm just going to assume that nobody liked that and they will never do that again. But we thank Steve.
Hit the like button.
Yeah, hit that like button. We appreciate it as always. So that was fun. I enjoyed that.
I mean, obviously, Steve is very, clear on a lot of things, and he's hopeful they get that contract. I mean, they get that contract, it's huge. There's no doubt, that the stock's performance, if you just want to talk to stock, is going to be linked to that contract. Yes. So, will they, recover? If they don't get the contract, stock is likely, obviously, to get hit significantly. If they do get the contract, likely to rally. So you have an event here. And I don't know if we have a projected date. I don't know if they have a projected date. Like obviously they said what they could. That they've done. They've went into some, obviously some testing, and they're in there. They're in there, and they think that they've got a shot at getting it, and they get it. There's obviously going to be a huge pop. So you have an event here eventually coming. We don't know the date of it yet. That there's going to be a significant move in the stock, either up or down, depending on the results of whether they get that contract or not. But it sounds like Steve, is still comfortable with the company, even if they don't get it. And so obviously you got to reevaluate from that perspective if you're trading it. But you've got to look at the stock. If you're trading it today, it's going to be a lot, dependent on that contract.
One thing, and just throwing out a crazy fundamental thing is, how long is the post office going to be around?
Joel, you say some crazy stuff, man. Spencer's laughing. What? Okay. What are you talking about?
Or in the same form that it is.
Joel goes off. He has these dreams.
No. Didn't Trump talk about getting rid of the post office?
What?
No? Did I dream that up?
You dream. You once you get a little bit older, like Joel, you get a little.
There's going to be a lot less.
You get a little
mail.
senile. You start confusing your dreams with reality. I don't think anybody's talking about getting rid of the post office.
I can't speak the future of the post
I don't remember a headline about.
Come on, someone help me out in the chat.
What are you going to do? What's your alternative to the post office?
How much mail do you get?
A lot.
You'd
think in a digital world you wouldn't get that much mail, but my mailbox is still full. It's all bills. It's all horrible stuff.
The chat's backing me up. Look at this.
No, they're not.
Go chat. Yeah, look at that. You guys, you laughing at me?
Joe wants to get rid of the post office.
I won't say they're going to get rid of the post office. I will say, just like anything else, things evolve. They lose money, right? Aren't they just a loser? Doesn't the post office just lose a ton of money?
Doesn't every government-run business lose money?
Right.
Why do you think it's 26 trillion in debt?
Look at that. Look how many people are saying how correct I am.
Could there be less mail in the future? Would be a good, way. Maybe not getting rid of it and jumping to conclusions that less mail equals no post office at all. I mean, yeah, we're in a digital world. We used to get, mails. We used to get like birthday cards in the mail, and you get the odd birthday card, but they all come email form or Facebook. I mean, but the bills, and yes, you can go paperless, and there's a lot of businesses that are going paperless. So could, the question is there going to be less mail in the future? I would say yes. Are we going to get rid of the post office altogether? I would say no. There's always going to be certain, essential services, and it's something that you need. I mean, my bills still show up. There's still, different things, obviously, that show up in the mail. I don't know. It's half of it's junk mail that you get all the time.
Exactly. Get rid of the junk mail.
And the junk mail is tough. So, that's, half of it's coupons. I kind of like the coupons. I get those Domino's pizza
I would
coupons.
say.
When's the last time you used a coupon that you got?
Well, I don't really eat out now. So since COVID, everything's changed, but yeah, I use the coupons. The A&W coupons used to show up. I'd be like, yeah, I'll eat a burger, or the Domino's pizza coupons show up. Yeah, I'll use that. So
I will say we are getting some great responses to that that off comment there. A lot of people are
you've got
agreeing with
everybody
me,
wound up now.
and a lot of people are telling me I'm crazy, which my wife does.
I don't
on
think
a
Steve
daily
wanted
basis.
to hear that comment.
No, I didn't
I'm glad
say
you
it
didn't
to
throw that one at
Steve.
Steve.
I didn't want to throw that at Steve. I wouldn't do that.
Here's what
No.
I would say. No one needs the post office until they really, really need it, right? Like when you need it, you need it. You need to get something out there. And I'm going to say the post office has a future based on the fact that stamps.com is up 175% year to date. So based on that alone, but it's a good comment. It's food for thought. If that ever comes in doubt, I'll short stamps and we can play it that way. I want to get to some tickers from the chat here. We have 5 minutes left in our show. We were asked about Walmart from the long side. So let's take a look.
How is Walmart doing? Here, let me.
Joel, if you want to pull up your charts. And
yeah. Dennis, you talk. That will give me at least 2 minutes to bring up the chart.
You're sitting here near all-time highs, and you're kind of got a flag going on. What do we mean by that? It's a sloppy flag, but I could see a little flag happening here, and it looks like it's consolidating to go higher. So just from a technical perspective, and you think about, even from a fundamental perspective, Walmart's still firing on all cylinders. And from a technical perspective, it looks like it's consolidation to go higher. So I kind of like it. It's not going to move like Tesla, but we could set up a trade here for you, and if you use the double bottom that we had back from July 13th and July 14th, 128.89, 129, say you stop yourself out 128.5, you risk yourself $3 saying, I think Walmart's going to break out, go to all-time highs and be above 140. It's not a bad setup here.
You know what? I have not looked at that since it had the big move, and it had the big move 2 days of consolidation and another big move. So it's holding on to these gains. I have to agree with you here that, the bump up, consolidation, bump up, a little consolidation, another bump up, a little consolidation here. Yeah, this chart trading up 63 cents here in the pre-market trading. Yeah, I have to agree with you on this one. They pounded this thing off after earnings, and then just was a sleeping giant here under 120 institutional accumulation. So yeah, the fact that I haven't even looked. I was gone last week, so I didn't follow it much after that big update. But the fact that it didn't give anything back on that, it looks strong. I agree with you on that one. And I think Walmart will be around in 5-10 years.
Yeah, I think so too.
Oh, that's a good call.
Okay, tickers. Yeah, 1 minute. We're going to do 4 more, 1 minute each.
Here, SHLL. This is the SPAC that's merging with.
What's this one got in it?
What? This is.
What's the SPAC going to be?
I was about to tell you, and you interrupted me. I was trying to say
it's my maid to interrupt.
That's merging with Hyliion. This is the. This is actually you could say a Workhorse competitor. They do electric trucks. So this is part of the electric truck trade.
I love the double bottom from the last 2 days, 21.20, 21.30. So you buy this, you stop yourself out. You can just do this for a short-term trade. It's a nice clean stop out. I'd say stop yourself out $21, risk $1 and seeing the upside. I don't mind this at all. Again, don't get stuck with these SPACs can really move in both directions. They are wild. They are high risk. Even LCA, people have all been following me into LCA. And yes, I have a big position in LCA, but it's still high risk. So knowing, that, these things obviously, can go down significantly as well. So, I'm only using speculative capital into stuff like this, not putting all my eggs in one basket, but I like the setup. I like the double bottom. I think you got a clean stop out under 21. So if you buy here at 22, risk yourself $1. I don't mind that trade at all.
It's not a double bottom. It's a quad bottom. Go back to July 13th and July 14th, 21.20, 21.45. So 4 lows in the same area.
Yeah. I like this area.
Yeah, I don't. It had a down day yesterday, a little bit higher volume, but clearly you have an out there. So once again, I'll agree with you. Important to take out this 22.59 because it really opens up into the 23 handle after that. 23.64, 23.33, and 23.95. So if it could just take out that high from yesterday. I think you got room to the middle, $23.
All right, we spent 2 minutes on that, so we went a minute over time.
Sorry.
Keep going. Quick, Spencer.
Should I hold Microsoft through earnings, guys?
I am. I'm long it, and I intend to hold it long. I have it in the long-term investment portfolio. Again, same thing. Depends on your time frame. If you bought this for a trade, short-term trade, I don't hold any short-term trades through earnings. If you bought this and sticking this in your long-term portfolio, I don't see why Microsoft is going to, it could get, anything can happen off earnings. So it's always a wild card, but I'm comfortable to hold Microsoft. I'm in from 149. We know this was one of the stocks that I bought back in March that, I thought was going to be okay either way. And I've held it since then. I plan on continuing to hold Microsoft. Stock still fine.
Josh told you to buy that one. You bought that when Josh was on the show.
Yeah, it was. I get all these trades from the Rasniks.
I'm
telling you.
I mean, once again, also going into a trade here. I mean, if you're holding this long term, who cares about the report? 216.38 is your all-time high. 214.32 is your all-time closing high. If you're worried or something, or you want a little protection, of course, buying puts is expensive. They'll be super expensive. But if you really feel like you have to do something, then you could write some calls or do something against it. Yeah. Or actually sell the stock or sell part of the position, but much based on your time frame and your investment horizon.
All right, I want to tease who.
One more ticker.
One more. Oh,
yeah. We're going over time.
I just took the charts away from Joel, so we'll have to
go it again. Joel, you can do the chart, Spencer.
All right. We're being asked in multiple chats about HTBX. Full disclosure, I've never looked at this. I think it's
Heat Biologics.
Yeah. Yes.
I've never seen this stock before in my life. Obviously, my filters probably don't pick up the $1 stock that it was 4 days ago. I have no idea about the story. It's been hot as hell. Hot stocks get hotter. I mean, if you are in this, you want to see it get above that 399 because that's where the high was yesterday. But it's continuing to go up. It's trend's your friend. If I was long this thing, I would stop myself out at under 274, which is yesterday's low.
If you want to sell the all-time high, you better get your order out at 152,900.
You're telling me there's been a few reverse splits.
Yeah. It's on a March. Let's just go here. I think that I don't know if I'd be buying it. For me, I would look for, you've had increasing volume, 30 million, 74 million, 240, 180, 206. So when the volume calms down and it consolidates, then it might be going down. Right now, just hard to pick. You did trade a little bit higher in pre-market trading up to $3.99. So use $4, whole number, possible. No, actually, that was from yesterday's session. So tough call on this one. Let's just use yesterday's high. I believe, $3.99, $4, psychological resistance. That's about it.
All right, I want to preview who will be on our show 48 hours from now, as a matter of fact. Thursday at 9, we'll be joined by the CEO and the CFO of Electromechanica. You might know the ticker is SOLO, SOLO.
Oh, yeah.
So get your questions ready for the CEO and the CFO to be a joint interview. That'll be tough with Electromechanica. That'll be Thursday's show. In the meantime, if you missed any part of today's show, you can always catch our podcast or rewatch the show on YouTube. Speaking of YouTube, smash that like button. We appreciate it, and it gives us motivation to go out and get more CEO interviews. So we appreciate that. A lot of likes today. Thank you very much to all of you in our chats. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your Tuesday, wherever you are. Stay safe and good luck.